General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, I got a knockout Thursday as well. See the news. Gold back up. NASDAQ tumbles. Traders load up on blue chip. Dow pumps. SoftBank tanks. Yeah. They dumped NVIDIA. That was crazy. Chases new highs. All right. Hold on, I gotta do Wednesday. So I'll go here. Start new. Wednesday. Took the high, came back and didn't take the low. So it's interesting for Wednesday. We kind of engineered that liquidity to set it up for today. Past everything that we would have wanted to buy. So here, this expansion. This is an engaged day. It's not a sideline day, even though I was basically sideline. And it could be medium. Everything lined up here. It does look like we do have an anchor for, what's this, a Wednesday midweek reversal. And it happened right at the old daily high. You can kind of see we had all this flat bottom, everything. So it kind of set it up good. Well, it wasn't confirmed. This is kind of like failure swing drop, no confirmation. Suspected but not confirmed. Wednesday, yes. of fact, I think the ADR for the week is hit with that ticking out. That new week opening cap. Where else would it want to go for the week? Oh, we still got October 25th. That low. Yeah, that low is down here. It's the 15-minute chart. And, oh, I didn't take the low. No, how price is showing no willingness to hang out at the high of the week. Just displace and get off the porch. Go to the H1. Kind of closed. I don't know what this go to, but oh, that was a target, but still, we we closed at 50% of this daily range. This being a small range, you still would expect a sweep. You would expect a sweep here. We closed at 50% of the range. A lot of reasons to look for sales. Let's go to the daily. Okay, so this probably go here. That's what it looks like. We didn't take this large up candle high, which is cool. We didn't really need this, and kind of look how we closed. What's this, the old volume imbalance or the old new week open the gap, because that's a weekly level. Kind of finished indecisive day with the doji. But forward and buy side, the liquidity was taken out. Lows engineered inefficiencies below as well. I see why everybody's looking for sales. Even if you don't want to do something as a trader, the chart will be like, hit the sell button. Just waiting for it. That's the thing. Okay, that's that. Let's go here. So Wednesday. Here. Just one side of the day on silver. Into the weekly order block. Just disrespectful. Leaving the range inefficient. Silver. It ain't nothing to even say. It's just everything was just up. This hour, yeah. What's this? Some equal highs, obliterated, flat top, demolished. High resistance liquidity run, retapped. Very interesting. Retapping that O level and getting the reaction that goes in the journal. I can get it. Here we go. That's why I put O highs in the PD array matrix. Alright. Note the reaction off the O high. That's notable. Yeah, that's the only thing that stands out. Get the daily. Came like we had a reaction to feel this inefficiency is here. Took out this gap. And we still got this high here. So I don't like this. This is an engineered high. Or let's just put plus the week high. This is the daily. And it's another week high here. That need to be ran. Even before like the sale that I want. Because it should be a pretty decent sale. That was just a sale to buy. Nope. But the high. A week high. Coupled with a week high. So that's unfinished business. the euro. The euro's doing really good. Just buy a down day on that. It's on for the euro. Let's go here. It's Wednesday. Wednesday was the chop day. Today was the show out day. So, well, it's not a chop day, but a retracement day. So we came back to. We left this Monday low. That's weird. I don't like that. But still a retracement in respect of the new week opening gap. Let's look at day 1. It's just a push down and a push up. Not really a nice delivery either. Like, I like this, but this is end of day. Price chopped all day. Then popped. Let's go to the daily. Just make sure you just get this candle because it'll give you extra candles. On Tuesday. Okay, it was right. Little doji day. It's interesting it leaving that gap too, but what can it do? Closing the open price is different. It opened with a gap up. They tried to keep price down. But end of the day, we rallied. Then this don't apply here. We was looking for that high. I learned about myself yesterday. Kind of realized gotta start getting in earlier because if you miss the move, you will tap out and get interested and may miss the re-entry. And this don't apply. It's gonna do that today. And I gotta do that now. So I'll add that to the Telegram. I'll do all that stuff at the same time. And I might as well do Thursday now on the same episode. So this Wednesday was actually the 12th. This is where we at now. Inquiry assessment. Let's clean up some of this. Don't need that. Oh, we took that out. That's taken now. So it's this flat bottom. Yeah, these are. What's this? The Monday high. We got it on. Well, we closed back through it on Wednesday. So we hit it Tuesday, re-hit it Wednesday, didn't test it Thursday. 50% is noteworthy because we closed through it. Let's make this. So Monday, 50%. That should fit. Fits right here better. If I do this, that's crispy. Boom. So Thursday, we closed through yesterday's low. Monday, this is thin, low resistance. It kind of just smacked it super fast, retraced, and then smacked it again. So I think Wednesday I stay. We bearish. Shift for framework hit rate. Framework is still here. Gotta be careful with this. Hot news coming back out after the government shutdown. We really don't know what to expect. Case studies. I think the case study this week is really I don't think nothing really stands out. These weird gap ups, these Asia highs. Well, the Asia highs have been getting ran. The Asia lows have been getting ran. This is an Asia low. Nothing that stand out. I'm noticing. Highs created in Asia. Just engineer liquidity. It will be ran later. Time frame context, time frame plus bias. Macro still bullish. These dips and drops haven't changed the overall bias. Things will have to fundamentally change because the drops It's not based off anything too bad. The thing with SoftBank, so let me address that. SoftBank took all the money out of Nvidia. Nobody cares. Well, that's the same. Expansion mitigation signals. Expansion is clear to the downside. Look for retracements to sell. Decision quality. Let's see. Low. Or no. That's low probability. The structure is lean to sell, but I want it to engage too early. Engage too early. Narrative framework accuracy is good. Spirit success or failure log or failure tag. Tag would be shot selection. Case study vault reference. Just be the Asia highs. And that's today. Thursday, 11/13/25. What was the news? Okay, probably opened up a few of them. Go to Forex Factory. Thursday, no news. It was supposed to be news Thursday. Okay, so CPI canceled. I could put this in here. Here we go. No unemployment rate for October. Pen. So it disappeared to a black hole. Okay, right. And that was going to be the bad data. Okay, so let's go to the notes. The aim was supposed to be CPI, but they canceled. Here, put this quote. This is what they said on Market Watch. And put the link. So they'll be like, oh, copyright or something. We can embed this. Make it look nice. This is what they said on Market Watch. So we got that going on. No CPI. So we ain't really getting the real data. And this is what occurred, which is like normal for a CPI day. Big crazy days. And CPI days usually set the tone. So if this is a tone setting day, let's just say you're going down for all the bears, because the bears. Let me make one for standard deviations, because I don't think I got one of those. Nope. Just give me the default. Then give me some. Let's see, 0.5. Then let me get some -1. Then we go 3.5. And do the opposite. Get some 2. Let me get a 3. 3.5 the other way. Just so I can see. Let me get no background. So we got 1 is down here. This is something too on the weekly. That's a weekly volume imbalance. Then we got 2. 3 is right by the 200-day moving average. That's crazy. Let me draw this out. Hold on. Can't see it. It's better. Let's say 24,194.71, which makes sense. We'll make them purple. And lock this. Then we go to, hold up, your trend line. That kind of lines up right here. It's like a last little breaker area, but 3 is even more detrimental. But it is interesting because price note here, your weekly. This is before that, and by the time we get here, this will be up here, which would be perfect to reaccumulate and chop people up. All the people who make money in this drop. We can lock this. Let me get these numbers right. Oh, this is the way. 2344.28. Okay. I'm gonna just put range expansion. Where's the text at that I just put? Oh, it's a middle center. Maybe I'll see it on a different thing. Okay, I see it. Hold on. Just in case the bears are right, I got my levels. Today's definitely expansion. I don't know. You could have engaged though. The retracement was good. And it's a high probability day because we got CPI. Everything is lined up. Yep, it is confirmed. We left it, didn't come back. We didn't even want to come back to the Wednesday high. You could say the terminus was here. Take this. $115. London is the high today. And what's the best time of the day to trade? This 15-minute London fair value gap. That's the set and forget entry. For that 15-minute fair value gap. That's the millionaire maker. Right there. Look at Asia, just dropping. We'll see if London do a retracement type thing, but definitely not chasing. So kind of, you left this, you need to come see something up here. You don't got to, but it'll be nice. With the M15 London fair value gap. Just want to look for work. Test this swing trading P array in the world. H1. See if it's some interesting retracement targets. Okay, so this is interesting because this is a balanced price range. Give me some like a brick wall or something like this. That'll work. It's just really, really dark though. It's H1 level. So if we come back here, I expect a reaction just because the wicks. We do have what's that called? It's the word when the wicks, the implied fair value gap. When you have to do 50% of the wick, right here is the fair value gap. So it's like this. Just go. No, just do EQ. I do need 50% of this expansion day too. And here. This a week too. So the implied fair value gap is this. It's 33955 and 231.72. This is way too large. This so I don't know. I kind of felt like that line was too thick as well, but it could just be this daily line or something. Well, it's 50%. That's what that is. 50% of the weekly box. EQ's blue. Probably a bug. Cause that it looks white right there too. Yeah, there's something going on. Nevertheless, this I don't need this line either. Previous week's closing price. This is also interesting too. The needs buy side here. We don't really need a middle line here. Yeah, we only got a down pass. Technically it's balanced, but we can still get order pairing here. And way up here, well, we tapped it. Otherwise, the indicator would have printed. This is what we got though. Let me lock this because it's sensitive. It might move or something. Retracements in sales, no TGIF. Retracements and get puts. Get puts for next week, because might not even sell, might just chill. Retracements in sell ideas. Let me get 50% to this expansion. Started here. And it's not expansion day, it's just expansion range. Let me make this brighter. I'm trying to get the text. Hold on, go here. Yeah, range is too much. That's right around here too with the Empire Fair Lake Gap buy side. Well, I'd be engineering a low, which is perfect to go up here and do something crazy and then come back down. Maybe even fake out people who think we're going up here. We took this low, we never came back here. So this is interesting too. Go to the daily. This can go, well, and that's what you call an expansion day. That's, I wonder if this like, it's like a double gap zone. Let's just make this the daily color. We don't even need no border on this because it's gonna overlap so crazy. Just this level here. Two VIs are here. Two volume imbalances. Okay, that works. Put middle top. Alright, so this week is interesting. For one, put this on the right. It's all kind of EOs down there. And October 25th is the most interesting. Sales here, interesting. Targets there, super interesting. Yeah, is the plan. Know how the day open. Day open with the gap. Smacking. It's being driven by the news. gaps for it just to be normal. Hold on, wait. It's silver next. Okay. So we got us a down day. Let's see. Retracement to 50%. Down day. Retracement to 50%. Pages opening up strong. Okay. You can still watch. No, we don't need it. Move this. We still got PD arrays we can mark. We don't need to look at 50%, but it is interesting because this was made here. Looks like we got us baby reaction here. We'll see if it holds, but lower should be expected. Turn range liquidity sweep here. We already smacked this. Fair value for buying down here. Be interested in buying here. Market maker model complete will be here. This will be the original consolidation. Maybe that'll work. Okay. We're starting a market maker sell model, and we can start watching legs on the buy side curve for inverse levels to participate. Okay. Let's go to the daily. Hold on, let's get a price first. It's the equal lows. Okay. To the daily. Like we're doing like a Judas here, but we got a flat bottom. Looks like we're starting off with a push up, but I'm looking to fade this move. Move with the proper reaction in the proper kill zone. Reason being, we can still go up. We still have those two daily highs. Okay. Team. Okay. Take this. We on Thursday now. Thursday was the expansion day. So after expansion, retracement, engage. Nice expansion day. I like how we left this little. Okay, take this out. I like how we let this little insular liquidity here. Kind of lines up with this gap too. Keep this liquidity. Line right there is cool. He's still super bullish. Looking for internal range liquidity sweep. And reversal. News, but okay, probably get retail sales. I don't know if we get PPI. We'll look some more. Is PPI still scheduled for tomorrow? Because they canceled. It took it off. You know, it's my trading view. They took it off. Forex Factory. Bunch of things we're not getting retail sales. What are they hiding? For real. Trading view is a word. Okay. Yeah, retail sales. Come on now. Very large range day. Do we want it? We won't. We won't trace me style. 50% is the standard, which even we just see. Since this is the expansion day, framed it to get to 50%. Interested in buys. Framework is playing now. Nothing on there. Engage. Trace wins for continuations. Boom. Okay, I'm all caught up. That's that on that. Y'all have a good day. Peace.